Risk management methods are what really separate traders who preserve their capital from those who lose gains by chasing. Making capital corrections is crucial for those who end up losing gains because they keep chasing. The short-term bounce can be a real challenge, especially when it comes to recognizing when a short-term cycle is just rebounding from oversold levels. It's important to know whether these rebounds represent tactical opportunities or just traps. During ongoing intermediate declines, traders often try to avoid these bounces, but in doing so, they might miss legitimate opportunities if they chase every upturn. Ignoring the elevated risk during intermediate downtrends is often the difference between those who succeed and those who don't. Intermediate cycle decline phases create elevated risk even if you see short-term rebounds. Intermediate cycles are used to measure the market's rhythm over weeks or even months. By tracking these broader trends, you can see that they actually contain multiple short-term cycles within them. Now, when intermediate cycles enter their decline phases, the pattern usually signals that selling pressure is dominating that particular time frame, and that's when swing trades really start to develop. These phases work to resolve structural headwinds, and short-term rallies, more often than not, run into resistance. Crossover resistance levels help distinguish reactive bounces from sustained advances. The 2-3, 3-5, and 4-7 crossovers provide these layered zones, showing that momentum has to reclaim them to really validate any strength. On the other hand, failure at these levels just confirms continued weakness as prices trade below all three crossover levels. When rebounds follow this pattern, it pretty much confirms that rallies are just reactive bounces hitting overhead resistance, not the kind of advances that are sustained. Alright, so let's dive into the downward price channel. This direction confirms the seller's position. Now, when we look at the control continuation over a 5-day channel, it shows us what's happening immediately. Whether the trend direction is rising or falling, it moves sideways until the channel turns downward during corrections. This pattern, it confirms the recent price action that's been established. We're seeing lower highs and lower lows, which form a downward structure. This really validates that sellers are maintaining control over the short-term rhythm. And despite those intraday session bounces, we get an objective confirmation. If you're ready to trade with more discipline, clarity, and confidence, predict the market days or weeks in advance, join the Market Turning Points community, and visit stockforecasttoday.com.